Hello，Hello，大家好欢迎大家来到今天我们的线上研讨会，关于冲突频发全球市场下一步将如何发展的一个研讨会。然后今天的研讨会呢，会有2位嘉宾来进行分享。第一位是我们全球的市场策略主管 Matthew Ryan，他会给大家带来关于 G7、G10、G3 货币的最新动态，以及货币市场去美元化的一个发展情况。然后第二个演讲呢，会是由我来带给大家关于在特朗普关税政策下面中国企业的一些如何应对新的这个形势，以及人民币汇率和新兴市场货币情况的一些分享。So first of all, let's welcome our head of market strategy, Matthew Ryan, to give us his speech. Thank you.
Thanks, Vicky, and thank you all, everyone, for joining and welcome to our webinar. As mentioned, my name is Matthew Ryan. I'm the head of market strategy here at eBri, based in our London office in the UK. I've been working for eBri for almost 11 years now, currently heading up our market analysis and commentary team. I'm going to be taking probably about 20 minutes of your time this morning. The main focus, at least of my part of the presentation, will be to give you a bit of an overview as to what we're seeing in the wider markets at the moment, particularly, of course, surrounding President Trump's reciprocal tariffs, which were unveiled beginning of April, have led to no shortage of volatility in markets. I'm going to focus on the latest developments on that front, how markets are reacting, and what we think the outlook is for the G3 currencies and the main currencies in the next few months. Before I hand back to Vicky, who's going to cover a little bit more about the latest developments in China. So Trump's tariffs are very much been front and center in markets in the past few months or so. The tariffs themselves were far more harsher than expected. Most countries are subject to a levy of at least 10%. Most others were far more aggressive than that, particularly aimed towards Asia. As we know, China was the biggest casualty, shall we say, of these tariffs. The initial reaction following April 2nd was to send risk assets sharply lower. That's mostly emerging market currencies. We've seen an underperformance, particularly in some of the Asian currencies in the last few months, given their high exposure to Chinese demand. But perhaps the biggest and most notable move that we have seen in markets is that, or at least in currency markets, is that the US dollar, which tends to rally during periods of heightened market uncertainty and market stress, has actually sold off quite sharply since Liberation Day. That's a departure from the moves that we've seen in the Japanese yen and Swiss franc, the other two safe haven currencies that have rallied quite sharply. We'll talk about that in a little while, but what we have seen is a delay to the 90-day delay. The tariffs, just almost as quickly as they were unveiled, President Trump pushed back the deadline for when they would come into force by a period of 90 days. That 90-day period ended last week, but once again, the deadline was pushed to the 1st of August, allowing an extra 3 weeks for negotiations, because as of today, the US has struck trade deals with only 2 countries, that's the UK and Vietnam. Even the deal of sorts that was struck with China wasn't necessarily a deal in itself. It was more of a trade truce that, again, kicked the can down the road a little bit and merely delayed the imposition of these tariffs. So time is running out for the White House to strike deals with other countries. We are hopeful that some framework bare-bone trade agreements will be reached by the end of the month that would sidestep these higher tariffs, particularly a US-EU deal. We are hopeful that will be forced through at some point in the next 2 or 3 weeks. It sounds as though that is quite close, despite Trump's threats over the weekend. But clearly, there is not enough time for the president to strike an accord with every country. So it's probably going to be a combination of some framework deals being struck before the end of the month, some delays, further delays to this tariff deadline, and possibly in some cases, if Trump believes that some countries are not playing ball, then we might see some higher tariffs from the beginning of August. Think it's probably going to be a combination of all three, which makes the predicting the market reaction in the next 2 or 3 weeks particularly challenging. As mentioned, probably the key characteristic of the movements that we've seen in markets in this period has been a shift in the market's view towards the US dollar, which we've talked about quite a lot in the last few months since the beginning of April. Higher tariffs, the threat of weaker global growth tends to be bullish for the US dollar, but actually the dollar has sold off quite sharply. We've seen a little bit of a stabilization of late, but we're still seeing the US dollar index trade quite comfortably lower than where it was at the 2nd of April. Why is that the case? Well, first of all, faith in America's institutional setup has been knocked following the erratic nature of the tariffs and the erratic nature in which they have been first imposed and then delayed, and then potentially likely watered down. The risk of a US recession did increase. At one point, markets were assigning north of a 60% probability of a US recession this year. That has since receded quite significantly amid a marked improvement in US economic data. The labour market in particular is holding up very well. There's no signs of mass layoffs or a big deterioration there. And we're expecting a decent rebound in US growth in the second quarter of the year. So markets not quite as concerned that the tariffs will lead to a US slowdown or a US recession. And that has helped the dollar regain an element of its safe haven status and at least stabilize against most of its peers. Fears over Federal Reserve independence have also been prevalent in the last 3 months or so, particularly following some verbal attacks from President Trump on Chair of the FOMC, Jerome Powell. We expect Powell to remain in his post until his term ends at the beginning of next year. The big risk for markets is whether or not Trump hires this so-called shadow Fed chair, i.e. names the next chair of the FOMC prior to the end of Powell's term. That's something that's been widely reported in the last few weeks. If that were to be the case, we'd probably see a little bit of dollar weakness as markets would fret that the Fed's credibility is at risk and that the White House and President Trump in particular is having or attempting to have a stronger grip over Fed monetary policy. As far as the US dollar is concerned, as I said, we have seen a little bit of a stabilization of late. The dollar has rallied against most other currencies since the beginning of July, but it's still trading considerably lower than where it was at the 2nd of April. You can see here, this is a chart of the S&P 500 index, the main stock index in the US versus the dollar index. Clearly, we've seen a big divergence in the two, whereby stocks have rebounded very sharply and the dollar is still languishing near its lows. Why is that the case? We think the main reason is that markets have placed an extra risk premium on the dollar, given the loss of faith they have in White House decision making. Markets are concerned about the erratic nature of White House decision making and the potential impact of these tariffs on the US economy. If we combine that with increased bets in favor of Federal Reserve interest rate cuts, then that can partly explain this underperformance that we've seen in the dollar versus US stock markets, which, as I said, have rebounded to well above their pre-Liberation Day levels. As far as Treasury markets are concerned, the big theme at the beginning of April was that Treasuries sold off quite sharply, which is uncharacteristic for a period of heightened market stress or concerns about the global economy. Generally, when we see this risk-off mode, treasuries gain in value and the yields drop, given the inverse relationship between a bond's price and its yield. What we've seen, however, is a complete opposite of that. Yields increased in April and May as a result of investors selling US assets that included treasuries. And easing fears over the tariffs have allowed these yields to normalize somewhat, but you can see in the last few weeks or so, we've seen another uptick in the 10-year Treasury yield, is back up to around 4.4%. We don't think that necessarily reflects the tariffs per se. We think that more has to do with fears over US debt, particularly following the passing of President Trump's tax bill through Congress, which is expected to lead to a big increase in deficits and US debt over the next decade. The bill itself is expected to add in excess of $3 trillion to the deficit over the next decade. I think actually estimates for this number have been revised higher in the last few weeks, which has led to increased jitters in markets. The vote itself was passed in a very narrow vote through both the House and the Senate. This will now be passed into law. Markets have really flipped 180 on not just the tariffs, but Trump's tax cuts since November's election. Heading into the election in the weeks following, there was a general sense and a general expectation among market participants that the tariffs and the tax bill would not only push up US inflation, but would probably lead to stronger US growth in the near term, particularly these tax cuts. But markets have shifted that view and now think that any boost to growth from lower taxes will be offset by fears surrounding what these tax cuts would do to the US or US debt levels and the US debt pile. And this has very much overridden any positive implications for growth, and it's partly weighed on the dollar. It's also weighed on treasuries, and as I said, treasury yields have continued their march higher in the last few weeks as a result. Having said all that, this sell America narrative that we have seen in the last few months has faded somewhat in recent weeks. This chart, this represents the US dollar index since the beginning of July. You can see clearly we have seen an uptrend in the dollar, which has gained against most major and emerging market currencies since the beginning of July, despite President Trump continuing to pledge higher tariffs on a handful of countries from the beginning of next month. Ordinarily, or at least typically since the beginning of April, the prospect of higher tariffs has been greeted by US dollar weakness. So the fact that we've seen the dollar rally in the last 2 or 3 weeks suggests that this overriding sell US, sell America, all costs narrative has either faded or it's gone entirely. Why have we seen this shift? Well, first of all, data out of the US economy has been pretty impressive in the last few weeks or so. The labour market continues to add jobs at a decent pace. Last month's payrolls report was pretty solid, came in well above expectations, both in the job creation number and unemployment. The PMI numbers, which represent business activity in the US economy, remain well above the level of 50. And estimates for US growth during the remainder of the year are much more rosy than they were at the beginning of April. Indeed, the Atlanta Fed GDP Now estimate is currently pointing to annualized expansion in the US economy of around 2.5–3% in the second quarter, which would be a pretty solid rebound from what we saw in Q1. And generally, the view on growth in the US economy in the second half of this year is not quite as gloomy as it was a few weeks ago, which has partly helped the dollar higher. The Federal Reserve is not seen cutting rates at its next meeting. We're likely to see the first cut in September, But even then, communications from the FOMC are likely to remain relatively hawkish. We don't think the Fed will be in a hurry to lower rates too aggressively, particularly given the inflationary implications of the tariffs. The dollar has also regained an element of a safe haven status. We're now no longer seeing that divergence between the yen and the franc on the one hand and the dollar on the other. They seem to be moving a little bit more in unison when we're seeing periods of risk off and risk on, particularly in the last 2 or 3 weeks or so. And also markets may well simply be calling Trump's bluff on these tariffs. As we know, the president talks a lot, he makes a lot of noise, a lot of bluster, but typically his bark has been worse than his bite since he took since his first term in the White House, and so far in this second term, markets are betting that despite all these protectionist threats and pledges for higher tariffs, that ultimately the White House and the president will come to the realization that these tariffs are not entirely good news for the US economy. Markets have pretty much forced the president's hand, and we don't think that that Trump will want a US recession to tarnish his legacy. So ultimately, markets are betting that the tariffs won't land as high as where Trump is pledging that they will do. And as long as that remains the case, then the dollar could remain well supported in the near term. As mentioned, the US economy is holding up pretty well. The latest non-farm payrolls data has been fairly solid. Job creation remains well above 100K a month. The latest data beat estimates by almost 40,000 jobs, which was very encouraging. We're not seeing a big increase in unemployment. Weekly jobless claims are now trending lower again and are not at levels that would cause too much concern. So businesses in America and business owners don't appear too bothered about the tariffs. We're not seeing, as I said, we're not seeing mass layoffs. We're not seeing high levels of quits among employers. The data that we've seen so far has been pretty good. But combine that with some of the business activity numbers, the latest growth figures, the data is pointing to a pretty solid rebound in the second quarter of the year, following the modest contraction in Q1. And as I said, the Atlanta Fed GDP now looking at around 2.5–3% growth in the second quarter, which is pretty solid. As far as the major and emerging market currencies have performed, this represents the rebound that we're seeing in the dollar in the last couple of weeks. As you can see, practically every currency, barring of course a few exceptions, have lost ground on the dollar in the past fortnight. Most notably, the Japanese yen, which is trading more than 1.5% lower against the dollar during that time, particularly amid bets that the Bank of Japan will not raise interest rates quite as aggressively as anticipated later in the year. Sterling has also sold off quite sharply. That's amid fears that the UK government will need to raise taxes again in the autumn, following what was a bit of a blunderous budget last year, which has led to a sharp increase in joblessness in the UK. And generally, emerging market currencies as well, most have gained on the greenback, barring a few exceptions. There's a handful in Latin America, one or two in Asia, the Thai baht, for instance. But for the most part, we're seeing a dollar rebound against most currencies, and we think that's probably likely to continue in at least the next few weeks. In the immediate term, should markets continue to bet that these tariffs won't be quite as onerous as they had anticipated in April. As far as the Federal Reserve is concerned, the Fed has maintained quite a cautious stance on interest rate cuts. There's been a lot of pressure on the FOMC to lower interest rates from the White House, but Powers continue to talk up the strength of the labour market, which is described as solid. The US economy is performing well, and Fed officials are concerned about the possible inflationary implications of the tariffs. You can see here, this is a chart of inflation expectations, which spiked immediately following April. They've come down slightly, but still remain very elevated. And that's partly why Powell and his fellow FOMC members, we don't think are in a rush to lower interest rates. There's probably likely to be a cut in September, but as I said, we don't think that the Fed will signal an aggressive pace of cuts beyond then. What do we expect from the major currencies going forward? Well, first of all, let's start with what we think will be the main drivers of markets, at least in the near term. First of all, attention is going to be very firmly focused on the trade negotiations and whether or not we'll see some deals before the end of the month. As I said, we're quite hopeful that we will see some framework deals being struck between the US and some of its major economic trading partners, most notably the European Union, that will sidestep higher tariffs at the beginning of next month. If not, we could see some delays again to this deadline. As I said, Trump is taking a slightly softer stance towards the tariffs. I don't think he'll be imposing as significant as tariffs as he probably had planned, and the markets have basically dictated that. Secondly, we're looking at economic data to see how the global economy responds to the tariffs. So far, it's holding up quite well. This chart represents the JP Morgan's global composite PMI of business activity. You can see that actually we're seeing a decent rebound in the data in the last few months, following weak data in April. So business owners are not quite as concerned about the growth impact of the tariffs as they once were. Should that continue, should be good news for risk assets. And then we look to the response of central banks, not just the Fed, but central banks globally. It looks as though at the moment, most are probably likely to take a fairly cautious stance. Most will want to wait and see how these trade negotiations progress before committing too far ahead to their latest policy decisions. And lastly, what are our views for the major currencies? Well, we've gone from having what was a mildly bullish dollar view to now one that's mildly bearish in light of the relatively chaotic nature of White House decision making and the extra risk premium that is placed on the US dollar. In tandem, we think that we're likely to see a convergence in economic performance between the US on the one hand and Europe, particularly the euro area, on the other. The Eurozone economy should, we think, rebound nicely next year, particularly once Germany's massive stimulus package starts feeding its way through into consumers and businesses. We think that's likely to boost growth in the common bloc next year and should boost the euro, as should a narrowing in interest rate differentials between the US on the one hand, where rates are likely to continue coming down in the next few months, and the ECB on the other hand, where we think there'd probably only likely to be one more cut before the end of the cycle. Again, that should be bullish for the euro, particularly against the dollar. As far as the pound is concerned, the other sort of big G3 currency, at least in our minds, the pound, we still remain optimistic on sterling. There are a number of reasons to be positive. The UK is isolated from the tariffs. The Bank of England is likely to cut rates gradually. The Labour government's pushing Britain closer to the European Union. Having said that, we are keeping tabs on the latest data out of the UK economy, particularly the labour market, as the recent budget and the recent business tax hikes and the prospect of further tax hikes in the next few months look likely to keep pressure on the jobs market and UK consumers. That's everything from me. I'm going to hand over to Vicky now. So over to you, Vicky, and feel free to take over the screen sharing responsibilities.
Thank you, Matthew, for your very insightful sharings. I will share my screen.那我是 Vicky 许胜佳，然后我是 base 在上海的，我是负责 eBury 中国内地的业务。刚刚 Matthew 给我们一个非常精彩跟丰富的一个介绍，关于现在特别是关税政策之后全球市场的一个变化。那 Matthew 作为我们全球的这个研究市场的总监，他也提供了非常多的外汇市场的讯息。那我们每个礼拜也会在 eBury 的网站上面进行公布，大家如果有感兴趣的话，也可以持续关注。那接下来我会把视野从国际市场聚焦到中国市场，因为今天我们很多参会的嘉宾是来自中国的企业，所以关税政策以及全球外汇市场波动对于中国企业的影响会是怎样的，以及中国企业应该如何更好的来面对现在的一个全球市场不确定性，我会来进行接下来的分享。首先，我们来回顾一下中国经济的一个整体的形势，它整体形势还是向稳的。我们可以看到，24年第四季度经济增长还是相对强劲，25年一季度呢 GDP 增长率是达到5.4%。今天早上的一个国家统计局的数据初步估算，今年上半年的 GDP 增长率也要达到5.3%。那近期呢，零售销售额也是超过预期，同时国家有很多补贴的政策，在促进国家内部的这个内需，促进内需、刺激消费的这个效果上还是非常显著的。同时，我们看到科创板，特别是以人工智能为首的这些热潮呢，也是提振了港股的股市。那么，在这样子总体向稳的一个经济形势下，问题依然会存在。比如说，我们看到 PMI 指数一直是接近在这个荣枯线附近，同时呢，更令人担心的是房价的持续下跌，特别是近期6月份的下跌速度进一步加快，可以看出整个房地产市场供需失衡以及消费者预期的转变，使得房地产市场持续低迷。另外呢，在中国来看，通货紧缩的这个指标也显示出了经济的疲软。2到5月的 CPI 是负值，2022年10月以来 PPI 指数呢也一直是处于负增长。那刚刚说到，今年比较大的一个变化，可能就是美国加了这个关税，中美贸易争端呢，也是经历了一轮升级之后，暂时进入了一个休战期。此前关税最高有达到过超过125%，现在征收的关税差不多保持在55%左右，但据特朗普上台之前呢，也是提高了1倍。同时，美国也是在跟许多亚太国家进行一个谈判的交易，试图遏制向中国去东南亚国家进行转口贸易的这些途径。那这个关税的加剧整个局势的困境呢，也是在出口上有非常直接的影响，特别是因为成本的提高，有很多制造商也要面临离开中国的这样一种威胁。但是相对来讲，因为关税原因导致进口成本的增加，它的影响可能是比较有限的，更多可能还是市场体现出对于中国通货紧缩的一个担忧。那中国经济未来呢，需要更多政策的支持。从财政政策的支持方面呢，包括国家还有整个不同地区的一些财政补贴，还有政府去提高工资跟消费水平，都会进一步的来促进内需。那在货币政策方面呢，我们认为还是仍旧会保持宽松。我们近期也看到了，比如说5月下调了 LPR 存款准备金率呢，也是下调了50个基点，主要的基准利率7天逆回购的数据也是有所下调，这都显示出来货币政策的一个宽松状态。未来呢，我们市场也是预计会有更多的政策来支持中国经济的继续发展。那在中国经济增长的一个趋势上来看，今年我国的 GDP 增长目标是5%，但是市场认为这个目标有点稍显乐观了。根据 Bloomberg 的观察，和2024年5%的增长率相比，2025年的增长大概是在4.6%的预计值。那家庭需求增长的同时，我们看到生产和投放却在放缓，所以未来来看，我们短期还是像刚刚说到的， 围绕房地产的低迷、家庭需求、内需的一个促进，还有紧张的贸易局势，存在这些短期的风险。但是长期来看呢，由于中国人口结构正在经历着显著的变化，人口老龄化的加速以及劳动力的不足，使得整个经济的结构还有消费结构转型存在一定的不确定性。说了这么多中国经济的一些数据，我们看到，虽然说中国经济存在很多不确定性，但是在加税之后，人民币的这个汇率的走向还是相对比较稳定的。自从特朗普解放日关税政策发布之后呢，人民币的抛售非常有限，而且很快的全面回升到了7.2对美元7.2以下的这个水平。那一方面也是因为人民币在整个人民币汇率市场在多年的这个培育跟磨合当中呢，双向波动已经成为常态。同时，人民币国际化也使得许多进口、出口的业务更加的有多元化的一个布局，在非美市场也有不断的增长，去填补或者说去缓冲因为美国加税带给人民币汇率的这样一个直接的影响。人民币也不再是只仅仅针对盯住美元这一个货币，而是盯住一揽子货币。另外，我们的央行的机构呢，也会有更强的能力和更多的工具箱来限制外汇的单边波动。那由于美元疲软的态势持续，就像刚刚 Matthew 提到的，大多数的预测者都认为美元对人民币将在短期内保持稳定，并伴随着美元持续抛售的行为。那这个关税的加征对于中国经济跟人民币汇率的影响，我们分享到这里。那对于我们今天更多企业关心的进出口企业到底会有哪些影响呢？我们拿出了海关总署的一个1到5月份已经公布的数据，可以看出总体来说，不管是出口还是进口，没有特别大的可能跟我们预期当中类似的这样子的一个变化。特别是出口总值前5个月还是保持增长，进口略有下降。那从中国出口企业的这个角度来看，不同行业的影响也相对有不一样的地方。比如说机械制造业这类产品呢，对美出口受关税影响相对较小，因为我们其实在近几年对欧盟跟东南亚的出口增长非常的快，在一定程度上弥补了对美出口的一个下降。那在电子设备行业呢，在加税后是略有下降的。那这可能也是跟3月在中美关税冲击之前夕出现了这个抢出口的现象，当时有大批的这个出口急于在政策落地之前去进行一个落地。那么尽管对于欧盟跟东盟市场的需求旺盛，还是很难抵消，特别是在抢出口这个现象之后，很难抵消对于美出口的下滑产生的影响。那在纺织品行业呢，我们看到整体呈现一个温和的增长，加税对于纺织品直接的影响，纺织品特别是原料的直接影响有限，而且现在纺织品原料在一带一路等新兴市场国家是保持一个增势的那在成衣制品上面受关税的影响更加明显。在汽车跟零部件行业方面呢，在关税调整后是略有下滑，加税实施之后呢，中国对美的零部件出口是受挫，对欧美以外的市场呢，出口增长较快。然后在化工产品行业，中美摩擦跟国际市场需求的整体疲软等因素，使得中美化工贸易是形成一个双向收缩的态势。那值得注意的是，2018年上一次中美贸易战的时候，其实有3个行业是出口最受影响的，一个是电子设备行业，一个是电信，就是像芯片等这些出口的行业，还有一个是纺织品的行业。但我们看到现在由于整个中国的出口的贸易伙伴有多元化的格局趋势，所以这一次的贸易战下面，我们这些传统的行业并没有受到太大的影响。那在中国进口企业方面呢，机械制造业在加税后反而是略有增加，只是因为近几年来比较高端的机械制造业的进口越来越多的来自欧盟跟日本等国家，所以这次美国加税之后，其实对于制造业的进口影响不是很大。电子设备行业的进口呢是同比大增了14.6%，这也反映出来在美国提高关税之后，中国从其他国家采购芯片、集成电路等关键零部件的这个需求量大幅增加。那国内电子产业发展呢，也带动了高端零件和进口材料的一个增加。那纺织品行业呢，它的价格波动 主要是由于它大宗商品的价格波动，导致整体的金额略有增减。那关税因素的影响呢，相对比较小。汽车零部件行业可以说是在进口方面影响最大的。1至5月份，汽车零部件行业是汽车零部件行业包括这个整车的总量同比是下降了32.4%，那它也是主要因为整车的进口下滑。化工产品行业呢，进口是保持高位，主要也是受大宗产品的价格影响，而不是受到美国加税的这个影响。同时，中国从中东还有东南亚的采购量明显有增加。那我们来看看中国主要贸易伙伴的一个进出口情况，其实应该跟大家想象中的是非常相似的。除了美国以外，东盟、欧盟还有一带一路国家，我们的进出口都是呈现一个增长的态势。那美国呢，也是进出口双边都是有所下降。可以看到，这几年美国已经是成为中国第3大贸易伙伴，而其他的东盟、欧盟还有一带一路国家逐步去分散了中国的这些产能以及中国的进口需求。那么最近其实大家可能比较多的听到去美元化这个词，那什么叫做去美元化呢？其实刚刚我们提到，比如说供应链，我的策略会慢慢转向非美的这些市场，它可能就是去美元化的一种趋势，但不可能说一下子把全球最大的一个货币结算的货币美元大家都不去用了，而是说面对新的格局、新的贸易的格局、新的货币的格局，慢慢有更多的出海企业，特别是中国的出海企业，主动积极的去应对这样子的变化。因为我们知道，我们肯定有这样的认知，未来的10年，未来的5年到10年，可能唯一的确定性就是不确定性，而唯一不会改变的就是改变本身。那我们也再回顾一下，在此之前，特别是在贸易战之前，以美元为桥梁货币的这个全球商业当中，国际贸易当中呢，以美元为主流货币的交易要达到约2/3，那国际外汇储备中美元的贡献也要占到3/5，甚至跨国的贷款啊，以及债券、证券有一半的都是以美元计价。最主要的是，我们的外汇交易当中有85%都是针对美元来进行的。但是随着全球贸易和货币格局的变化，美元的霸权呢也是面临了结构性的挑战。大家可以看到，美元右边这张图，美元在全球外汇储备中的占比从2001年的73%下降到2024年的58%。那随着地缘政治风险的增加，大家可以看到这一张图当中，全球外汇储备中非美元部分的份额呢，也是在不断增加，包括中国在内的很多市场，还有一些新兴市场国家呢，也在不断加强自身本国货币以及本地的这个金融基础设施的建设，使得可以减少对于第三方货币的一个依赖。那我们看到，通过 SWIFT 进行人民币支付的份额从2012年到2020一直在增加，我们也观察到越来越多的客户开始选择跟考虑通过地货币来进行结算。那这里呢，给大家分享一个案例，其实这是一个非常传统的一个中国出口商的一个案例。那中国出口商他卖产品到一个欧洲的，比如说西班牙的买家，我们可以看到，对于中国出口商来讲，它的成本是人民币；对于西班牙的进口商来说，它的收入在当地的收入，或者是它在转口到其他欧盟国家的收入呢，是欧元。可是为什么收入是欧元，成本是人民币，却双方是以美金来定价呢？我经常会问这个问题给我们中国的一些客户，那他的回复就是啊，那我们传统意义上我们大家都是这么做的。我觉得这个答案在以前可能可行，但是在这个不确定性不断增加的全球贸易格局下，这个答案不再可行。因为我们可以看到，其实双方都没有拿自己的本国货币来做定价，其实都把双方都暴露在了整个外汇的风险当中。假设说人民币升值，那对于中国出口商来说，他以美元定价获得的美金可以换到的人民币更少，压榨了他的一个利润。假设说欧元贬值，那对于西班牙进口商来说，他要支付的美元成本其实也变高了。所以这样子的这个的 双方不但面临 eBury 大家提供了3个比较有意义的这个策略。第一个就是要降低外汇风险的策略，第二个就是要优化跨境支付的策略，第三个呢就是要优化整个供应链流程的策略。我们也会马上会发布一个行动指南，这行动指南也会更好的去给我们全球的有跨境业务、有出海业务的公司、企业还有合作伙伴更好、更清晰的一个行动指南图，告诉大家每一步应该怎么做以及它的主要优势。我今天也在这里简单分享一下。刚刚说到第一个是管理外汇的风险，因为我们看到像传统的贸易当中以美元定价为主的这种贸易结构链，也许会有改变，那么我们就要重新去审核我们到底面临的是怎样货币对的一个外汇风险，以此来去制定适合自己的预算汇率以及稳健的外汇对冲策略，选择适当的对冲工具，也考虑到我们业务的实际的需求来制定不同的对冲策略。那它的好处就是，首先我会降低企业利润率的一个波动，不会因为外汇市场的波动来影响我主营业务的一个生存以及利润的好坏。其次呢，特别是对于我们财务端的这些同事来讲，它更好的能够提高财务的预测的能力，以及改善现金流的一个透明度，也帮助我们更好的在不管是对于买家还是供应商的定价上，提供我们的这个决策的观点。那eBury 呢，之前其实已经跟很多客户通过这个6步的构建全方位风险管理策略，帮助每个客户从定位、确立、设计到执行、监控、评估去提供每个企业量身定制的一个外汇风险管理方案。刚刚我们也提到，因为不同企业有不同的这个管理的需求，我们也有不同的这个对冲方案，适合不同行业的企业需求。那么第二点呢，就是优化付款流程。其实因为随着更多的国家去用自己的本土货币来进行结算，来减少对第三方，特别是美元的一个依赖程度，越来越多的，特别是中国出口到新兴市场国家，面临着更多我要去在当地收当地的币种，去用当地的币种跟人民币进行直接兑换等等需求。那么我们也要同步的去优化我们自己全球的一个收付款的流程，包括对流程跟成本进行测算，以及跟 eBury 等支付的外汇专家进行合作，来使用我们在全球的一个账户的能力更好的进行本地的收款，用本地的货币进行收款和付款。同时呢，我们也探索更集中化、更整合化和自动化的财务运营机会。那这样做的好处呢，首先是可以降低交易的费用跟外汇的成本，其次呢，也是可以减少人工成本，使得我们整个资金流、现金流变得更加的可视化。最后呢，我们也是要建立一个灵活的供应链。那其实这个在我们刚刚前面的分析当中也已经看到，这个已经是我们中国进出口企业在主动去寻求选择跟方向的一个选择的一个方向。因为原本我们可能更多的依赖于美国作为欧美作为我们主要的这个贸易的伙伴，那现在随着东盟还有一带一路国家的崛起，我们也要更好的去评估我们不同地区供应商的一个货币偏好与风险，通过探索替代市场与货币来实现供应商的多元化，在多元化的格局当中，为我们自己的本营直营的这个业务去提供更好的一个利润的机会，真正的把现在这个不确定性的这个挑战变成我们自己企业的一个机遇。那我们也介绍一下如何来支持我们刚刚说的这些行动指南。像 eBury 我们在20多个国家跟地区都可以为客户提供当地的货币账户，同时呢，我们也可以根据当地的需要，使用 eBury 的 IBAN 或者是银行账户来进行当地的收款跟付款。在这些新兴市场国家呢，我们也提早进行了一些布局，比如说在亚洲，我们支持像包括人民币、印尼卢比、印度卢比、马来西亚林吉特、泰铢、菲律宾比索等等货币。那在非洲呢，我们支持像尼日利亚、西非法郎、中非法郎等等地区的这个当地货币，我们都可以用当地货币进行收款，然后把它换成我们自己企业本身想要用的货币，比如说人民币、美金、欧元等等。拉美呢也是一样，我们支持在墨西哥、智利、阿根廷、哥伦比亚、巴西等等地方国家去支持当地货币的这个收付款。那今天我的分享呢就差不多是这样子，这边也会给大家提 提供我们整个 eBury 的一个企业微信以及我们的微信公众号，我们也会经常有一些外汇的及时的资讯以及研究分析报告，通过这些渠道公布给大家。谢谢大家的时间。